Shares in Berjaya Corporation took quite a tumble in intraday trading, falling to as low as 24.5 cents, a 5-year low. The counter was also the most traded stock, with 244.5 million shares changing hands. The trading volume is significantly above its 5-year average daily trading volume of 11.9 million shares. It eventually settled unchanged at 26.5 cents for a market capitalization of 1.37 billion ringgit. This comes days after a fatal accident at Sultan Abdul Aziz Shah Airport in Subang, involving a Berjaya Air jet and a maintenance vehicle. Bcorp founder, executive chairman and largest shareholder Tan Sri Vincent Tan Sri Yun has said the airline was not at fault for the incident. The counter has been seeing a decline ever since Tan announced his personal plans to restructure his business empire on December 20th, 2018. Consumer inflation slowed in February for a second month, led by a drop in the prices of fuel and diesel. Inflation, as measured by the Consumer Price Index, fell 0.4% in February from a year earlier after contracting by 0.7% in January. According to the Statistics Department, transport costs, which make up 14.6% of the CPI's overall weightage, had fallen by 6.8%. However, that was countered by the higher prices of housing, water, electricity, gas and other fuels, as well as food and non-alcoholic beverages. Both Putrajaya and Bank Negara have been expecting inflation to remain low before picking up towards the second half, dismissing concerns that the economy could tumble into a recession, as it did in 2009. Vietnam left its key rate unchanged at 3.25% in March, although economists are not ruling out the possibility that the central bank may cut the interest rate this year should global economic growth slow further. Permodalan Nasional Berhad has denied a Bloomberg report that said it was considering its first sale of exchangeable bonds. PNB said in a statement today that it always continually assesses and examines the various means and methods to raise capital for its domestic and global investment activities, including debt instruments such as exchangeable bonds. However, it clarified that its board of directors has not approved nor considered any exchangeable bond program. It went on to say that such existing or future borrowings, if undertaken, applied and will only apply to PNB's proprietary portfolio and do not involve its unit trust funds like Amanah Saham Nasional, which are segregated and distinct from its proprietary fund. PNB added that operations and investments of its unit trust funds are strictly regulated by the SC, which means the fund wouldn't be allowed to undertake any borrowings for the funds or encumber the assets under these funds for any purpose. Rubber glove manufacturer Top Glove reported a 3% dip in second quarter net profit to 105.79 million ringgit due to higher income tax obligations. The company saw a reduction in tax allowance following the expiry of a special reinvestment allowance in 2018. Revenue rose by 21% to 1.16 billion ringgit due to stronger sales growth on the back of higher global demand and average selling price for its products. For the 6 months ended February, net profit inched up by 0.6% to 215.85 million ringgit, while revenue rose 27.7% to 2.42 billion. Executive Chairman Tan Sri Dr. Lim Wee Chai says the group delivered strong results despite a challenging and competitive operating environment. He says the group is looking to further expand its operations, adding that by December 2020, Top Glove is projected to have a total of 848 production lines and a production capacity of 80.9 billion gloves per annum. Hong Leong Investment Bank says the growth in co-working space bodes well for real estate investment trusts, malls and property developers due to greater footfalls and secure tenancies. In a note today, HLIB said there is a potential symbiotic relationship between REITs and co-working space operators. This is because the operators usually lease a large chunk of space. Hence, REITs may be compelled to offer a discounted rate. In return, REITs will benefit from take-up rate certainty by signing on one large tenant versus multiple fragmented ones. Co-working spaces are also positive for neighbourhood malls in terms of occupancy and footfall, while property developers are able to lease their unsold office inventory to these operators as a temporary solution to earn rental income.